Welcome back for another AMT Insight, and in this video I'll be discussing in which ways changing demands for goods inventory across global supply chains could significantly impact base metals prices. Now firstly, it's clear that we've seen very severe shipping congestion globally this year, and that's been combined with very strong goods demand, particularly in regions like the US and Europe for most of 2021. What's been less clear is how much of that apparent underlying strong demand has been due to a bullwhip effect, so perhaps over-ordering by panicked retailers and manufacturers that have just been trying to secure extra inventory as a result of this supply-constrained environment. Now, this is particularly likely to be true for larger companies, so those with the cash flow support a just-in-time or a just-in-case rather than just-in-time inventory management strategy. But as the bullwhip effect theory goes, the effect of this can compound quite significantly as you move up the supply chain and give this kind of increasingly distorted perception of underlying demand strength. And the risk there is that when the underlying catalyst of that, whether that's shipping disruption or generally, underlying quite strong demand eases, then that can eventually result in big surpluses and excess inventory when that eventually eases. Now, there's optimism in the current situation of the world at the moment that there is going to be a lot of pent-up demand from consumers who weren't able to get hold of goods because of global shipping disruption, and also optimism that they'll have the money to purchase those goods because of the excess household savings they were able to build up over the course of the pandemic. Delving into the shipping topic in a little bit more detail, another point I wanted to pick up on is the ongoing delays to shipping due to COVID-related port congestion and container shortages, and the implication of that on growth in transit metal inventories. So the table here shows rough estimates of, at any one particular time, how much metal might you expect there to be in the global shipping system, so on a ship somewhere or on a truck being transported between countries. Now, the share of this consumption varies very much by metal, depending on overall in terms of global trade flows, the distances that these different metals have to be transported, and also the role of recycling, for example. But overall, I think the conclusion from this analysis was that the change of this figure due to delays is probably quite limited in terms of its global market impact. However, if you take that step further and you start thinking about the implied growth in transit inventories for most traded goods due to shipping delays, then perhaps you can start seeing there that there's the potential for this compounded impact across the supply chain that may be a bit more significant. So perhaps you've not just got an increase in metal inventories in transit, you've perhaps got more concentrate, more semi-fabricated goods, more end consumer goods, for example. Now, the eventual easing of the shipping disruption could free up that extra inventory in the freight system, and that's perhaps another, almost in the same way as the bullwhip effect, another sign that there could be a bit more inventory coming back to the market as shipping disruption eases. Now, the big question for both of those points really is, when might that shipping disruption ease? And indeed then, following on from that, when will broader supply chain dislocation start to ease as well? Now, the head of the Port of Los Angeles has said that he expects the peak of shipping disruption to be in February, so behind the Chinese New Year holidays, but has said that it expects the tightness could persist in one shape or another through to the end of 2022. Now, we have seen that container freight rates have eased from September highs, but where they are at the moment really is very much still far above pre-pandemic levels. So the jury's still out really on how long things will last, but I don't think it's going to be an immediate easing of supply disruption based on what we've heard in the evidence out there and the thoughts of people in the shipping industry. Now, the final point I wanted to make is perhaps a bit more of a long-term issue, perhaps less related to the pandemic-related factors, has been the role of whether governments will likely develop or expand the role of strategic metal inventories in the future. Now, you can see the arguments for that are growing quite steadily. You've got growing geopolitical tensions and competition, for example, between the US and China. That's the biggest one at the moment. You've also got a growing role of resource nationalism. So Indonesia, for example, trying to hoard a lot of the raw materials that it produces so it can develop its own downstream inventories, and South America as well, trying to gain greater revenues from its domestic raw materials industry. Now, in terms of strategic inventories and critical minerals in particular, rare earth metals in over the last decade or so have really been the ones that have been in focus because of the dominance of Chinese supply. But we saw a couple of months ago the US put nickel and zinc on its critical minerals list, And we're also seeing now this growing role of base metals, or understanding and realisation of how integral that's going to be in the clean energy transition and in the government-led infrastructure projects around that are going to revolve around that as well. So I think that any move that you might see, it's not that any of these nations have really implied they're going to start building up inventories, but any move by them to start doing that, whether that's in Europe or in the US, could provide some quite strong price support to those key energy metals. So overall, there's a few thoughts there about inventory demands and the role of inventory perhaps in the situation we're seeing at the moment and longer term. Again, if you're enjoying the insights or finding them interesting, the insights that we're putting out on a semi-regular basis, then I would encourage you very much to join us on LinkedIn, follow our LinkedIn at AMT, the details are above me there, and then that will keep you up to date on any new insights that we are putting out from time to time. Thank you and goodbye.